Hi everyone, I'm Ken from Crypto Trading KS. Just like the VIX, which is the fear gauge of the stock market, there is a fear gauge of the bond market, and it's called the move. A lot of uncertainty is creeping into the bond market. Why is that? Recently, we've seen yields explode higher, bond prices come down, but what was really interesting was the decay in the DXY. It's very important to understand market structure. The DXY recently rejected a major smart money sell level. Then it came down to support, but that support was weakening. What we saw was a big sell-off from that point. In the ADP non-farm employment change, we had a huge increase in employees. The employment change was forecasted to be 226,000. Instead, it was 497,000. Big gaps like that move the markets considerably. That spiked yields up, but the problem was that the ADP seeks to measure or to pre-estimate non-farm employment change, and it didn't by a wide margin. That sent the markets into a tailspin. Instead of seeing an explosion in employment, just pretty much like what the ADP numbers were, we saw just a decrease in numbers. The US dollar becomes very attractive as rates and yields rise, but we're not seeing that. The fact that non-farm employment change was so low takes a lot of pressure off the Fed. Hence, it flows through to the dollar. All financial markets are interdependent. When you look at yields, you may think about savings in a bank. When you look at the DXY, you may think of savings under the mattress. When you look at the main market indices, you may look and say, that's stock market attractiveness. And when you look at something like commodities, like gold, that's an alternative asset class, as is Bitcoin and crypto. Of course, you can also look at the DXY as FOREX. There's not just one market. There are many financial markets, and they are all interconnected. For example, if money flows out of FOREX, out of the DXY, that makes other currencies more attractive than the US dollar. That therefore impacts yields. It impacts commodities. It impacts so many things. It's very important to keep your eye on the DXY. There are also cross-linkages, for example, crypto to the S&P 500. Crypto is a very good risk-on or risk-off indicator. This is why we often see crypto bottom out first in any real big market sell-off in the major indices. If you're a traditional stock market investor and not looking at crypto, you're missing out on very valuable information. Let's have a look at this. What are we seeing here? This gold line is Bitcoin. The white line is total crypto market cap. And what is this chart? That's the S&P 500 futures. What do we see here? We can see that Bitcoin and total crypto market cap were coming up. That signified a bit of a rally inside the S&P 500. But you saw it also coming down, which meant that risk-off sentiment was penetrating the market. And what happened next? We saw a bit of a bottoming action. Notice the lags on these things. It's very cool to understand that all markets are interdependent. Just like the S&P 500 is the index for the stock market, Bitcoin is like the index for the crypto market. How Bitcoin goes, so too do the alts. We can see over the past 24 hours Bitcoin's momentum here. And what about Ethereum? It followed a similar one. What about BNB, Binance Coin? Followed a similar one. XRP was showing minor signs of strength, but then aligning with Bitcoin's gravity. But this is interesting. ADA was also showing a bit of strength. XRP and ADA have been strong. We've seen Solana was strong yesterday. What about Doge? Just aligning with Bitcoin's gravity. Litecoin just aligning. And Solana still showing a bit of strength in there. Solana is a good one to keep your eye on. Major institutional players are backing the EDX exchange, and there's a lot of activity for a Bitcoin spot ETF. When we look at the EDX exchange, it for institutional players is trading 4 cryptos: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. This institutional interest is changing the dynamics and the value of Litecoin and Bitcoin Cash relative to other cryptos. We've already seen Bitcoin Cash absolutely take off, and Litecoin is coming into its halving. With the CTKS method, we can reveal underpinning market structure, and market structure is always changing. Market structure does not remain static. Understanding objective dynamic market structure, also called CTKS structure, is really important. It's like getting X-ray vision. And what is that objective dynamic market structure doing? We saw recently that Bitcoin tried to take out a level of internal structure at around that 31,573 mark. It failed. And then there was a smart money buy level around that 30,992. It failed as well. If price doesn't get held by a smart money level, where is it going? It's going to the next one down. If it doesn't get held there, it's going to the next one down. And we see this all the time. What are these smart money levels called? They're called Stanfield levels, or SLs. And we can see one right here at around that 30,410 mark. You can see how price ping-ponged between SLs, and it does this all the time. It's stuck in a range at the current time, but the good thing we have, there's a lot of support from that 29,650 down. What does this mean? The buyers will, in all probability, step in and support Bitcoin's price, especially as the DXY is coming down. We haven't seen it yet, but it is one of those stackings of probabilities. Returning back to the DXY, if we invert Bitcoin's price action, we can see it typically follows the DXY's path. That means if the DXY goes up, we would expect Bitcoin to come down. And if Bitcoin is coming down, all the crypto market is coming down. I'll uninvert Bitcoin so you can see Bitcoin in its natural habitat. You can see as the DXY goes up, Bitcoin naturally comes down because Bitcoin is measured in US dollars. You can of course measure Bitcoin in other things such as Euro or Australian dollars or whatever you like, but USD is the predominant form of currency. But when we look at Bitcoin coming up as the DXY came down, that's not a commensurate cycle. What we're seeing is the DXY literally drop like a brick, but Bitcoin just blipped up. We're not seeing the full follow-through as yet, and that's what I was referring to. When the DXY comes down, when yields come down, gold just loves that. Let's have a look at gold. As the DXY sold down, look at that inverse reflection. Look at how gold just shot up. There's more to gold than the DXY, but it's a good thing to look at. And look at the difference when we see Bitcoin. Even though the dollar came down, Bitcoin really didn't come up that much. Personally, I'll be looking for follow-through on the DXY Bitcoin relationship in the next week. One thing to note, you can see Bitcoin and gold moving in the same directional correlation. You can see as Bitcoin came down, gold also came down. As gold went up, Bitcoin also went up. A lot of players will tell you that there's an inverse relationship between gold and Bitcoin. Well, sometimes there is, and sometimes there isn't. You just got to look at the actual chart. What people say is a theory. What the charts do is practice. In the past 24 hours, the Nasdaq and the VIX were released into the CTKS Method service. Each video that goes into the CTKS Method service takes hours and hours to do. Those videos also help explain where smart money is buying and selling, and it does a projection out to the end of the month. Just to let you know, the day before that, gold, junk bonds, and the US 10-year were released into the CTKS Method service. And thank you so much, everybody, for your really kind comments. We have an incredible global family, and I'm just so grateful to know you all. Recently, YouTube did a change, so everybody's usernames have just gone all over the place. Inside the comments, there's so much wisdom that is shared. And we have an incredible global family. I appreciate you all very much, as does Kate. And thank you, Beardy. TSP did a really good catch. Rule 239, CTKS structure overrides. Objective dynamic market structure, which is where smart money is buying and selling. It changes every month. This is a really powerful thing to know. From a structural perspective, there's a lot more overhead resistance in Litecoin than Bitcoin Cash at the moment, and the prices are reacting accordingly. CTKS structure overrides momentum, but it also overrides news. You'll find there's many other things it overrides, and I'll bring it out when it's relevant. Thank you so much to everybody who comments. We have a beautiful family, and just reaching out and saying hi is just a great way to just connect with each other. And thank you also to Miles. What Miles is saying there about covering the different topic, or covering the same topic in different ways, is what I always try to do. I always try to give you an edge inside the financial markets. It doesn't matter, stock market, Forex, commodities, crypto, anything. I'm trying to always give you an edge. Tales from the Man Cave has done a really special video. I want to share that with you. Thanks so much, Tales from the Man Cave, for your amazing capability and artwork. Wow, what a creative genius. Just like price action in financial markets, which is always moving in a wave, either up or down, so too does our life trend move up and down as well. If you're going through a life pullback at the moment, please know that our community's love, over 16,000 people strong, spanning all around the world, their love and healing thoughts are with you. You're not alone, and there's always hope. Life pullbacks are a time to strengthen. They're a time to think about what is truly important in your life. And the good thing to remember, you don't ever take a step backwards in this world without taking 2 steps forwards. Keep your eye on the future and know that everything will work out. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.